Let's face it, banks deal in billions. They handle our paychecks, savings, and loans. But how much of that money is just sitting there, waiting to be withdrawn? Today, we're diving deep into the world of Ally Bank and uncovering the truth behind their cash reserves. Ally Bank, formerly GMAC Financial Services, is a digital-first financial institution known for its competitive interest rates and lack of brick-and-mortar branches. But unlike the bank down the street with its vault full of cash, Ally operates differently. So, how much cash does Ally Bank really have? The answer isn't as straightforward as you might think. Banks don't actually hold onto all our deposited money like some giant piggy bank. They invest a significant portion in loans, government bonds, and other assets to generate income. This keeps the financial system flowing and allows banks to offer us those sweet interest rates. Here's where things get interesting. Instead of focusing solely on raw cash on hand, we need to look at Ally's cash and cash equivalents, CCE. This broader term encompasses actual physical cash, along with highly liquid assets that can be quickly converted to cash, like short-term government bonds and certificates of deposit, CDs. Essentially, it's Ally's most accessible pool of money. Now, pinpointing the exact amount of Ally's CCE can be tricky. Banks are required to report their financials quarterly, but the specific breakdown of CCE isn't always explicitly stated. However, we can do some financial sleuthing. By analyzing Ally's financial reports and using data from financial information providers, we can get a pretty good idea. Here's what we found. Recent trends: Ally's CCE has fluctuated over the past few years. In December 2022, reports showed CCE around $5.57 billion. However, data for the quarter ending March 31, 2024, indicates a jump to a healthier $8.153 billion. Hold on, a jump? Why? There could be a few reasons. Perhaps Ally is preparing for increased loan demand, or maybe they're strategically building their reserves for future investments. But is $8 billion a lot? Well, that depends on your perspective. Compared to traditional banks with vast branch networks, it might seem like a smaller amount. However, for a digital-first institution like Ally, it represents a significant war chest for future endeavors. Here's the key takeaway: while the exact amount of cash Ally has on hand fluctuates, their CCE demonstrates a healthy level of liquidity. This allows them to meet customer demands, invest strategically, and remain competitive in the online banking space. But what does this mean for you, the Ally Bank customer? A strong CCE translates to stability and security for your deposits. It means Ally has the resources to navigate economic ups and downs while continuing to offer competitive rates and reliable service. Remember, this isn't financial advice. If you're considering Ally or any bank, it's always wise to do your own research, consider your financial goals, and shop around for the best rates and terms. With that said, thanks for watching, and until next time.